Good evening. Welcome to the Journey to Become Wealthy. My name is Kelvin Reed, and man, today was a wild day, right? Today was definitely a roller coaster. I mean, the highs, the lows, the emotions. I'm sure many of you experienced it if you were trading in it today. Today was a day. I mean, you went from believing that you were making money today to you losing money to making more money and just back out again. So we're gonna take a look at that, right? Today was just definitely a crazy day. Hopefully nobody got in here and did any emotional trading. Hopefully you stuck with the technicals that I've been teaching you. You made some trades and you made some money, right? No, take all the emotions out of it because that's what this stock market game is about, right? The market itself will manipulate you into believing that things are gonna be fine, things are getting better, and again, it take it all away. And we've seen this a couple times already in 2022. So. Yeah, let's get into it. All right, we got the Dow down 8.89%. S&P 500 down 1.10%. The Nasdaq down 1.30%. Our pre-market movers, nothing here that we're really interested in. But you see these negatives are higher than these positives, right? Just something to take note of. The Hang Seng down 0.69%. The Hang Seng down 0.69%. And I'm slightly surprised the Hang Seng is down. They actually had news today that China was trying to assist by lowering interest rates to assist businesses, I believe is what it was. Let me actually check that out. It's China stock market news, right? We want to see what that was, right? I want to make sure I give you guys the facts. Hong Kong Hang Seng jumps 3% as China cuts key lending rates. Property tech stocks soar, right? So China cut their lending rates, meaning that they're trying to boost up their economy. So that means we have some positive news for a lot of the Chinese or Hong Kong stocks that hang out that are incorporated into the Hang Seng. So that was definitely good news, right? Good news for China today. We saw a lot of the companies run up today, but they also they slowly came back down along with the rest of the market. The Russell 2000 up down 1.88%, down 1.88%, and I'm telling you, if you guys watch the markets today, this thing is hard to believe, right? We saw our portfolios fly to the moon and come back down over the course of today's market, right? From open to close, it was just wild. So let's check out the stock market heat map, see how everything ended up. Looks like mostly red and down, right? Mostly red and down. Technology sector look like it's heavy red. Most of the technology sector. Apple down 1.03%. Sony down. But if you guys look at the arch right there, you see how much it looks like it ran up for it to come all the way back down and still be up just a little bit. Financials are down today. Wells Fargo down 1%. Bank of America down 1.49%. Goldman Sachs up 0.23%. But again, look at it, how it looks like it might have run up. And we'll review a couple of those. Morgan Stanley up 4.28%. I think they gonna look good because due to their earnings. So Morgan Stanley, I think they had good earnings for this last quarter. So that might be why you guys know that this was one of our alternatives to Goldman Sachs. So you had Goldman Sachs or Morgan Stanley to get into as a financial play, accompanied with Wells Fargo or Bank of America to get into. So, these are our financial plays that we got into just going into the new year. Communication services look like they came down pretty beat up. A few little green pieces in here. Airbnb did okay. Baidu, whatever that may be, I'm not certain what that company is, but we got a few little green pieces, but majority of it is red and beat down, right? We see in the sector red and beat down. Communication services, healthcare, red and beat down. Pfizer still hanging out between that $53 and $56 mark range, right? So if you guys thinking about swing or day trading this, you already know hit that $53 mark or lower. Once it buys the dip, you buy a low. Go back up to its $56 range or $55 or $56 range. You sell out, you take your profits. That's an easy swing trade for those of you who are trying to do things like that. Just something to keep in mind. But yeah, the healthcare sector look like it's just red like everywhere else. Consumer cyclical, Amazon steady getting beat down 2.96%. Baba up 2.58%. JD.com up 6.50%. Yeah, so Bob and JD.com. Now again, we know that those may have run up due to the China news, right? China had that good news that was a positive catalyst for these companies, and that's why they're actually positive on the day. Tesla up 0.06%. Again, flat all the way around. Energy sector red and beat down. Energy sector consumer defensive. Walmart looked like it ran up all nice and pretty earlier today, and it came down. I actually had a discussion with someone with some family today about how the stock market. They saw their Walmart stock go up, and they saw it slowly come back down. I'm sure they were excited to see it go positive, excited to see it making money, and then all of a sudden it's like womp womp, back to reality. But again, Walmart again is a long-term play. It is a good long-term banger. So I would not be looking to get out of this if this is a company that I was looking at, get into, because again, we know about the metaverse. We know they're making moves towards getting into this. So I do see Walmart in the future continuing to be profitable, continue to make money. They are one of the largest consumer defensive discount stores. So it's definitely one to hang on to. Real estate looking red. Utilities looking pretty much mixed, and basic materials looking mixed. So we don't see anything positive, right? Nothing outside of the Morgan Stanley and the BABA being up due to China. Just Morgan Stanley being up due to earnings. The market is pretty much red, especially most of the stuff that we've been looking into and trying to get into is pretty much red, look like on the day. Crypto. Y'all know crypto gonna follow the market, right? If the market came down, crypto came down with it. It looks like Bitcoin is just getting lower and lower. I mean, the cheaper it is, the cheaper you get into it, right? It's currently sitting at $39,454, down 7.33% now at the time of the recording of this video. Luna down 6%. Doge down 8%, Shiba Inu down 7.87%. Man, all these big losses. Ethereum down 8.98%, Binance Coin down 9.64%, Crow down 5.54%. Man, and it looks like just a little bit of everything is being beat down. Mana down 9%, Sandbox down 12%. Again, if you guys know, hopefully, either you're a long-term investor or you waiting on these bottoms, right? We're not emotional trading. We're not looking for things to be up and down, or, we're not looking to buy and then make money in the same day. Some of these you can, right? Some of these you can. We're taking advantage of. We're watching the stocks. We're watching the charts. We're watching the trends, and we're taking advantage of those. However, some of these are not meant to be those quick money plays, right? Some of these are long-term. We in it for the long haul. Y'all know me, right? Because I saw prices come down the other day. I went shopping, right? But y'all see, I'm still holding most of those. I'm still holding those. I plan on continuing to hold those because those are going to be, I'm building my foundation. Let's not forget about that, right? Let's continue to build our foundation. That way, when these things run back up, we in the money, right? So right now, I know things look ugly. It's blood red, right? It's a bloodbath out here. However, money will be made. And I mentioned that we were going, a correction was coming down 10% to 20%. So do not be surprised if you see these things come down even more, into tomorrow. Fridays, there's sometimes we have a Friday sell-off. I tell you guys this every week so that you kind of get used to it and kind of look forward to this. But also there are days where the market looks green and pretty. But after coming down on a day like today, I wouldn't be surprised to actually see green tomorrow as far as like correction, because these companies have to come back up to the valuation prices, right? A lot of these companies are being oversold. Hungry investors like myself, we get in here and we buy, we go shopping on these discount days. And it's possible that the market may get pumped back up on tomorrow. However, it's also a possibility to continue to come back down. Big companies could jump out. Big companies could just not want to touch a lot of these, tech plays or crypto plays as of right now. But again, as the rotation continues, it's just now January. As the rotation continues, money will come back and rotate back into these companies, and we'll be already had us a piece of the pie because things will be flat for quite some time, right? So don't be afraid of that. One article I wanted to check out was NASDAQ 100 futures fall at the Netflix earnings disappointment. My goodness, Netflix had, I don't know what their issue was, because their earnings were good, right? Their EPS beat what it was predicted by 63%, and their revenue beat what was predicted by a large percent for the quarter. However, they do not believe that their future quarter, right? They predicted that their next quarter they will actually be in the negative. They do not believe that they will be able to meet their earnings per share. So a lot of investors jumped out of Netflix and caused the stock to tumble and the Nasdaq to tumble with it, right? So Netflix has been profitable, I mean, for the past years, several years. I mean, I remember it was a long time ago when I was looking to get into Netflix. However, again, remember I told you guys one thing I always regret, right? When I first started looking into this stuff 4 or 5 years ago, I was like, man, I don't have money to sit around. And I would invest and I would pull the money back out, right? I would invest and I would pull it back out. And a lot of the companies that I was investing in 4 or 5 years ago, I would have made me a millionaire today. Would have made me a millionaire today. So that's one of my biggest regrets. That's one thing. That's one mistake I do not plan to repeat. In 2022 or 2023 or whatever the next 5 years may come. Right. So that's one of those mistakes I do not want to repeat. I would have been a millionaire. I'm telling you guys, whether it was Tesla, Netflix, Nvidia, Bitcoin, Ethereum. These are all companies and stocks and crypto that I was in 4 and 5 years ago. If you guys go look at those prices, you'll see I would have been a millionaire today. However, I needed the money. I was going through something. I didn't want to leave the money invested as I should have. I wasn't as wise and as learned. And hey, so I'm learning from my mistakes, right? This is my second chance so that we can all become wealthy, right? So that's why I'm here with you guys, teaching you guys how I learned from my mistakes, right? We're going to throw this money in here, money that we don't need, money that we don't want to touch. We're going to invest in good companies. And we're going to hold on. We're going to make money, right, with this. We're going to make day trades. We're going to make swing trades. And we're just going to keep making money. That way, if we do make, I told you, I've been showing you guys how to make $100 here and there. We can pull out that extra $100. Or we can choose to invest into another company. However, we do not want to take out the money that we're investing for the long term. So that we, in the next 5 years, we can make our future investors or we make our future millionaires. And I want I want you guys to be in it with me, right? I want to do this together. So shares of Netflix tumbled 19% during extended trading on Thursday after the company's fourth quarter earnings report showed a slowdown in subscriber growth. I mean, everybody in the world has subscribed to Netflix. Of course, the growth is going to slow down. So, hey, it made earnings drop. Peloton, meantime, plunged 23.9% during regular trading after CNBC reported that the company is temporarily halting production of its fitness products. During regular trading, the Dow shed 313 points or 0.89% at one point during the session. Yeah, so the rest of that is not relevant, but that Netflix news was definitely major, right? The Netflix news was definitely major. It was something we had to be aware of. So we expect to see some downturn tomorrow, if maybe more, right? However, Netflix came down to about $400, right? That may put it in the buying range for many of us. For people who want to invest in Netflix, again, this is a second opportunity. So it's actually at $500, $508. So again, I want you guys to look at this trend, right? Every company in the market did this today. They started out at the open. They shot up 5. And I won't say every company, but a lot of companies today. So excuse me when I say every company. A lot of companies, they shot up. They came back down and they went back up. I mean, you had the impression that everything that you were invested in was going to the moon. And as the day continued, it started getting lower and lower and lower until the point where you're like, God, I should have took some money out. I mean, that's what you thought, right? You're like, God, I should have took that money out while I had a chance. I bought it low. It finally went up. I could have took 5% on my money. Instead, now I'm down 1%. And that's pretty much what the stock market did today, right? That's what it did to a lot of us. So I'm going to give you guys a quick look. We're going to check out the Robinhood portfolio, right? Again, look at this. What I tell you. Come on, look at it. We were up. Look, I was up. What was I up? I was up $1,100 at one point today. $1,100 at one point today. Almost 5%, 4.92%. Then look at it. It's slowly, and this was at 10 o'clock. I'm at the highs, 10 o'clock. I'm like, okay, money making Thursday. I'm happy. I'm smiling. I'm like, yes, sir, let's get it, right? And slowly, this joker just coming back down and down and down. And now, look, I close out the day. I'm down $272. That's the emotion of the market, right? Y'all don't see me sitting here crying and hurt about it, right? I know that money will be back. And you got to think about it. If I continue to hold, these things are going to go a lot higher than what they did today. They hit highs today, but they're definitely even more higher. They will definitely go higher in later on in the year. So let's check out some of the companies we got. We see ChargePoint down, Neo it's hanging out. Again, it's lower than what it was last week. I'm not happy about that. Baba lower than it was earlier today. It was up $137 at one point. It's okay. SoFi, y'all see what I did, right? I had 200 shares of this last video we talked about, right? We talked about them. I needed more cash, right? Some play money. So I sold 50 shares of my SoFi when it hit the $16 mark today. Buy low, sell high, right? It hit that $16 mark. I was like, okay, it's time for me to cash out a couple of these, shares. So I took out that shares and I moved it around to buy some call options, right? So and I plan on getting those 50 shares back, but when the joke goes back down, when it goes back down to the $12 range, $13 range, $14 range, the low under $14, I'll buy that 50 shares back. When they go back up to $16 or higher, I'll buy those. I'll sell those shares again. That's how we make the money, right? That's the rotation. You gotta think about it. I actually looked at it. Those 50 shares that I bought for $12.30. I bought 50 shares last week or 2 weeks ago at $12.38. And when they got to $16, I sold all 50 of them back, right? So that's $4 a share, right? It made $4 profit a share, $200 profit that I made just off of last week, right? But again, I want it back because I want to continue to rinse and repeat this money. PayPal was up today, came all the way back down. Crowd, it was up, came all the way back down. And look at it. You see everything. I mean, literally all of these were up in green today. Hopefully you guys can see these charts, right? Kind of see them closely. You see how it was above the dotted line here, and then all of a sudden it started to come back down under. And that's just how it is, right? That's the market. That's the market we're in right now. That's how the volatility is. But it's okay. We're not concerned about that. We know this money is going to come back. We know we're going to make this money. We're going to keep doing what we're doing. Ethereum looking at its $2,800 range. I mean, shoot, if it keep coming down some more, I might throw some more money in Ethereum. I'm looking at it. Bitcoin steady coming down. Definitely I think I'm gonna throw some money into this at under this $40,000. I can't really resist that. Again, I told y'all I heard this the other day, right? When others are fearful, we should be greedy. When others are fearful, we should be greedy. However, I'm gonna be smart about my greed, right? I'm not gonna go pick up the steak off the ground. I'm gonna wait till I see these at their bottoms. I'm gonna wait till I see the steak has been, when it's aged to perfection at the bottom, and on this way ready to be cooked. That's when I'm gonna pick these shares up. That's when I'm gonna pick the shares up, though I can catch the ride back up to the moon, right? I want to make sure I buy them low and sell them high, and just like that's how you guys should do as well, right? Just watch these trends, pay attention to these things, right? A lot of people today may have lost money because again they did emotional trading. They saw the market going up. They're like, oh my God, SoFi going to the moon. They bought it at the $14, $15 range. They saw it get to $16. And then all of a sudden they caught it coming back down. And now they hurt. They like, oh my God. But we were already in this. We already had a price. So we already knew when it came down under that $14 range, we said, hey, we're going to buy. We already had that, right? We already had it in writing. When it came down under the $14 range, we're going to buy that, right? We did that. So we had to make sure we're aware of that. And we keep doing those things. We got to keep making smart investments. So that's really what I got for you guys today, right? The market, like as I said, it was an emotional day for a lot of people. A lot of people may have did some emotional trading. So as the markets were at their high, they were buying the market high. They bought the market at the high, and then as it came down, they were feeling hurt, right? They did emotional trading. So let's not jump into these based on the emotions, right? Let's not see things running up and then buy it. You should always be looking to buy them on the way down. Buy them on the way down. Do not wait for that upturn because it's going to come back. Of course, you'll lose some money in the short term. You lose 1%, 2%. And just make sure you set your stop losses. I told you guys how to set your trailing stop losses. So you maybe want to set them for 10%. So if it comes down 10%, you're able to get out. It'll kick you out without losing more than 10% of your money. However, make sure you buy the thing make sure you know your entry prices, right? Make sure you know what your exit price is. Make sure you're not emotionally trading. Make sure that you don't see this stuff go green and you're like, okay, now's the time to buy because that's an emotional reaction, right? We see green, that means go, right? Red means stop. However, in this stock market game, it's the opposite. Red, on the way to the bottom, You gotta catch it at the bottom though. Let's not buy it while it's still a falling knife. Catch it at the bottom. Watch it patiently. Wait. Catch it at the bottom, and then you buy it, and then you wait for it to ride back up. It may, again, like I said, you may lose 2% on the way down with it. But just anticipate, if you're investing in good companies, if you've done the proper due diligence, you've done your proper technical analysis, that these things will return to their greatness, and you'll, in the end, you'll end up making a lot more money now. End up making a lot more money later on in the grand scheme of things. So, hope you guys made some money today. If you're on my Instagram, you saw I did a call option on SoFi, right? I got in, I got out. Hopefully y'all saw that. I actually accidentally deleted my screenshots while trying to do something. So I'll probably find those for y'all and try and share them tomorrow. But hopefully you follow my Instagram, so you saw them as I posted them to my stories. I made a quick $50 or $60, 40-50% in that, and I actually still holding one, and I think I'm gonna try and get out of it. But again, it's all the way out until March 4th, so I have plenty of time. Even if SoFi comes back down, I have plenty of time for March, right? So I bought two. I bought one at 147. I actually did let it do its thing, and that SoFi came back down this evening. I bought a second one, right? So I'm still in it, and it's about the same price. I'm hoping that it runs up tomorrow, and we repeat and do this thing again, right? We make another $50 tomorrow. I made $400 for the week just out the stock market. So hopefully some of y'all made some money today, whether it was on the way up or you anticipated the way down. Hopefully you didn't do any emotional trading. You stuck with your what you felt, your entry prices, your exit prices, and just the things that I've been teaching you. You've been doing your analysis, and I'll see y'all tomorrow, right? So I hope y'all make some money. Hope y'all have a good night. I'll see y'all tomorrow.